sentiment for metals and mining stocks has strongly improved. The fear of inflation is giving them a tailwind. In addition, global economic recovery is looming, which is likely to further boost demand for industrial raw materials. Unsurprisingly, metals and mining stocks had steadily risen in price in recent quarters. So, what are still attractive stocks in this industry for the medium to long term? Make sure to watch this video till the end because we got all that covered right here. What's going on, guys? Welcome back to another new video on this channel. In today's video, we're going to count down the top 7 stocks in metal and mining. This selection was arrived at by considering precious metals and raw materials needed for the energy transition, such as copper and lithium. If you're new here, be sure to subscribe to never miss out on our latest episodes. Shall we do this? Number 7. Freeport, Mcmoran. Freeport McMoran owns large copper and gold mines, and it is expected to benefit immensely from the sharp rise in the price of copper, which is projected to rise to $15,000 in the near future. Now, that gives you a good opportunity to take advantage of that projection. Currently trading at $35 with a market capitalization of $51.24 billion, Freeport McMoran stock has been performing well on a year-over-year basis. Looking at the technical charts, it's clear that the share has risen more than 360% in price in a year, and if the copper price continues to rise, there's even more potential in the stock. And considering that copper and gold sales are increasing, there's no doubt that the anticipated strong cash flow will help the company to reduce its debts. In the same line, the strong financial position will for sure translate into higher dividends and share buybacks. Therefore, having Freeport McMoran stock on your portfolio may just be another great decision, considering that its equities are still actively priced, despite the strong rally. Number 6. Newmont. The global gold giant and producer of copper, silver, zinc, and lead operates mines in North America, South America, Australia, and Africa. It prides itself as the only gold producer listed in the S&P 500 index and is widely recognized for its principal environmental, social, and governance practices. And considering that the cryptocurrency industry is facing stricter regulations, Newmont, a top choice among gold miners, is set to benefit from increased demand for gold even as many investors turn to gold as an inflation hedge. The positive outlook for the precious metal definitely reflects on Newmont, which also has an attractive 3% dividend yield. In addition, Newmont has completed the acquisition of GT Gold Company, a move that puts this company in a good position to compete effectively with other companies in the industry. It's an acquisition that Newmont President and CEO Tom Palmer has termed a worthy investment, saying, "With the acquisition of GT Gold and the Tatoga project in the highly sought-after Golden Triangle district of British Columbia, Canada, Newmont continues to strengthen our world-class portfolio." Currently trading at $62.6 with a valuation of $50.17 billion, Newmont is expected to continue recording growth on cash flows even as gold prices rise. And that will assure investors a consistent increase in dividends. You can never go wrong with having Newmont stock in your portfolio, considering that the gold mining business has strong fundamentals and an attractive cost profile. And considering that the stock is projected to close the current year at $75.7, you can't wait for any more to buy into this stock while it's still trading low. Number 5. Rio Tinto. Rio Tinto is a diversified mining company that leads in the production of the 3 most consumed industrial metals that are iron ore, aluminum, and copper. The company also specializes in several other metals and minerals, including boron, salt, diamonds, and titanium. By operating on a large scale, it is able to offer its minerals and metals at a lower cost. It has a strong financial profile, and it's notable for selling mines, which provides it with enough disposable capital to invest in other related ventures. Rio Tinto is likely to benefit from strong iron ore prices and copper prices. With a price-to-earnings ratio of 6.4 and a juicy dividend yield of 5.5%, Rio Tinto is too cheap to be missing from the favorites list. This considering that its stock is currently trading at $81 and it's expected to close the year at $101.98. It has planned capital investments of $7.5 billion, which will keep the production profile high. Already, Rio Tinto has begun operation at a new commercial-scale demonstration plant to produce high-quality scandium oxide in Quebec. The $6 million project is set to premiere in the development of critical and strategic minerals in Quebec. The giant aluminum producer has also expanded its investment portfolio by partnering with Innobat, European battery technology and manufacturing company, to accelerate the establishment of a cradle-to-cradle battery manufacturing and recycling value chain in Serbia. The project is expected to tap into the high demand for electric vehicle lithium batteries, and that, together with several wise capital allocations for the company is currently undertaking, comes to the benefit of investors. Number 4, the BHP Group. This is another well-diversified resource company that has copper, iron ore, coal, nickel, zinc, and potash mines in Australia and in North America and South America. BHP Group is also stretching its foot into the petroleum industry with a competitive edge on low-cost products as well as cutting-edge technology. With a good dividend yield of 4.3%, BHP is for sure one of the quality dividend stocks that is suitable for income investors. The energy transition will increase the demand for copper, nickel, potassium, and steel, and this will have BHP benefit to the large part considering it's an industry leader in these metals. And the free cash flow will help the company deleverage the high debt position, driven by the sales of iron ore and copper, which contributes to the largest percentage of the company's revenue. Together with 4 major investment products worth $8.5 billion in the pipeline, BHP paints a rosy picture for a long-term investor. Therefore, having this stock in your portfolio will go a long way in ensuring you've got a consistent stream of dividend income. Number 3, Lithium Americans. As the world strives to achieve zero emission, automaker companies are shifting to electric vehicles, a move that is likely to see a surge in the global demand for lithium, which is used to manufacture batteries for electric vehicles. It's estimated that the demand for lithium will double by 2024, and Lithium Americas will be well positioned to meet that high demand. This considering that already Lithium Americas is partnering with Ganfeng Lithium to expand production in lithium carbonate equivalent in Jujuy Province, Argentina. At the same time, the Thacker Pass lithium mine site in Nevada, which is pending regulators' check, is set to be the largest lithium mine in the United States once it becomes operational. Lithium Americas Corporation is up 264% in the past year, but most of the rally is yet to come. There is no doubt that the company has a richly filled greenhouse, which of course can be used to expand production. That makes the stock, which is currently trading at $13.5, still attractively priced. Number 2, Hecla Mining. Hecla Mining is the largest silver producer in the U.S. and also deals in gold. The company offers investors exposure to both precious metals, which are known to perform well in the market. The high silver price ensures robust gross earnings for Hecla Mining. The mining company is well positioned for sustainable growth, considering that it has diversified its asset portfolio and owns 2 of the largest silver mines in the world, besides pursuing acquisition opportunities. Established in 1891, the precious metal miners' shares skyrocketed in the month of May by 52%. That came as a result of the good first quarter report for 2021 earnings in May, in which sales increased 54% year over year and were the second highest in the company's history. Now, this position cash flow makes higher dividend payments likely. Number 1, Southern Copper. And finally, we have Southern Copper, which boasts of the largest copper reserves with about 68 years of mine life. This is likely to offer stable cash flow for an extended period of time. So if you're looking for exposure to copper, this is the most suitable quality stock you can have in your portfolio. It has larger copper reserves than Freeport, and with the higher copper price, you can't doubt the fact that Southern Copper is recording robust gross earnings. Southern Copper wants to invest $2 billion annually, which is good for steady production growth. Already, analysts have estimated that the company will record a net sale of $2.55 billion, up 42.6% from the year-ago period. With a forward price-to-earnings ratio of 13.47, the company is offering an attractive dividend yield of 4.16%. And at the time of this video, Southern Copper was trading at $59.48. And still, the stock has even more upside potential considering that it's projected to close 2021 at $71.33. So there you are, 7 stocks in metal and mining. And as we've seen, the metal and mining industry is showing a promising future, as can be seen from the fast-growing stocks in the industry. What's your take on these top 7 metal and mining stocks? And which one would you prefer to invest in? Let us know in the comment sections below. If you enjoyed watching this video, kindly give it a like and subscribe to this channel for more interesting videos. Remember to turn on notifications to never miss out on our latest episode. Thanks for watching, and I'll see you in the next episode. Until then, stay sassy.